Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So another interesting day. I'll tell you, this market has a lot of people spun around. It has both the longs and the shorts. I feel like a little frustrated. So I don't know what that means, and I don't know if it's going to change. But what it should do is have you somewhat low gross, low net. I don't even know how many times we've had at this critical point when now the market's going to crash and get out of Dodge, or we're at the critical point, we're going to break out, put risk on, you got to be in stocks, otherwise you're going to underperform and you're not going to be involved. So at this point, we're back at the critical spot and things look like they're breaking down. Risk off, be careful, but we've seen this movie before, or we've gone to the wells many times in this spot. The question is has the well run dry? And you have to trade obviously based on your, what makes you feel comfortable, and you have to also know your time frame. What you do is, let's just start rolling through some things. Here's the SPX, okay? This is the SPX. This is, I guess if you draw a line here, from the lows, we're kind of, it's hard to draw because it's not, we're kind of through this ascending channel again, okay? And has there been any follow through this time when we were through it, or this time when we were through it, or when we touched it here, or held it there, or came into it in all these spots? No. There hasn't been any downside follow-through. Same way there hasn't really been any upside follow-through. Okay, what you do know, I guess, here is, you had your outside day. This was the day that it looked as if we were going to actually have some downside follow-through and break to the downside, and then they trapped every short, putting the fear of God in people being short again, and then this happens. So, for me, I came in today probably long 6, 7 things, or 5, 6 things, and once we didn't have any commitment, if you look at my chart from the morning, I talked about pretty much this spot here, which was, I think, 2096 to 2102, broke below it, and I just got out of harm's way. Listen, I'm married, and you have to work on your marriage and show commitment to your marriage, but in the markets, you don't have to. Okay, if the markets don't show commitment to a certain type of elevation or a certain type of support or time frame, you don't have to either. And I guess in a marriage too, if so your other half doesn't show commitment and cheats on you, this and that, you can get rid of her too, or him. It depends on how extreme. So not saying this lack of commitment here in the S&P is extreme, but there's some, contributing factors. Let's go back one more time. So if you go pretty much to here, okay, and you look at this ascending channel and almost a little bit of a 60-minute head and shoulders pattern, if we were to break this, once again, chances are, we could see a move at least down to here, if not below, maybe. But one thing that has me more concerned is you look at the Russell, okay? Just to see an ascending channel, okay, here you go. This is an ascending channel that it was riding. It broke it right here, okay? A lot of people, if they shorted here or shorted here or shorted a few times on it, definitely got a little hurt, so people were probably a little bit like, oh, I'm not going to do it this time. Okay, but here's your outside day, here's your reduced risk in the Russell, and then, it actually reversed, but what happened is stayed on the right side of this ascending channel, below the 8 and 21-day moving average, and then boom. Okay, so here was your follow-through. Okay, first time it had follow-through to the downside, creating a pretty big move lower with another area of support. So if you remember yesterday, I posted a chart saying maybe we could rally back and retest that spot. So what happened yesterday? Actually, no, sorry, that was Friday. And then you had the rally back to retest this 123. I think I wrote 124, which was a little bit higher. And then today, kind of broke below it, came back above it. A little bit, again, this is your ascending channel. This is your break to the right side of it. Made a new low well before the S&P. Is it leading it? Perhaps. MDY was a little stronger. Not quite there yet, but this too is on the right side of the ascending channel that it broke. Broke it right here, tried to retest it, and now it seems as if you're having downside follow-through. And this engulfing bar, could have got you out of a lot of your stocks within this sector. And, if you're ever looking for follow-through, this could be the time. So this right side was broken. The Russell right side was broken. You go to the IBB, okay, to see whether or not, the right side of this. Remember I drew this channel for you guys? Okay, so here's your ascending channel. Okay, you have your accelerated one up here, and that's when that broke up there. Then it broke below, had some downside follow through, retested, and not quite back at last week's low, so it's showing a little bit better action versus the mid caps and the small caps as of now. But still, looks more broken than constructive. Okay, so that's that. Then you had the stronger spots. I was long Morgan, I was long Citigroup, and I stayed with them almost till like 11:30. And then you look at also the XLF. You know, was it going to have some follow through? All right, so here is your XLF. Okay, and what is this? This to me, you know, unfortunately, I would say that, you know, we might get a trap in the banks. Who knows what happens? And here was your push through, came back below. That's one sell signal. And then when we close below this breakout, probably shouldn't have happened. So if you're playing for a momentum move back to highs, you get out. I was playing for a momentum move in Morgan Stanley. I was playing for a move in this stock back towards the highs of the year, not as an investment. Hopefully saying we take this out, we get some follow through. Yesterday looked good. Then today, couldn't even get above it, and now we engulfed yesterday. So that got me out. So now I have to wait again. Citigroup, you know, pretty similar, even worse actually. Look at the size of that move. So I tried to stay with it. It couldn't push even above the prior high. And then once it started to go red, I got out of it and I saved myself some money. We'll see what happens next. But I was playing for a momentum break, not to be an investor in the financials right now. Goldman Sachs, I even tried at 200. And look at that tail. Look at that choppy mess. So you have the weaker groups, okay, which we just went over. We went over the weaker groups, which, you know, have been troublesome, like the Russell and the mid caps and the buyouts. And then you have a stronger group that had sort of breakout failures. So again, with all that in the S&P only less than 2% off the highs, it's like, you know, what's going to give here? And then you have all the high beta names. You have the high beta names that are relatively bent and almost broken. You know, the best in breed was Netflix. I actually made money buying Netflix on a breakout, you know, with this morning. But then what happened? It turned into a topping tail, right? So this doesn't look like a swing long. It looks like it could open up in the gap tomorrow. Tried to go above a momentum level and couldn't hold it. So if you're playing for momentum, that's when you get out. Amazon, not much here. Okay, still not broken, still above the earnings gap, but you know, these are your two strongest momentum names that are a little wishy-washy, but I guess they're hanging around. You know, Apple, a little concerning to me. Everyone knows I love being in Apple. Okay, I love being in Apple when Apple's good. Okay, Apple gave you your first shot across the bow here when it couldn't hold 133 and reversed. You had your move down into support, and then you had your first bounce into a lower high. A red dog reversal yesterday that you could have sold if you bought into here, maybe even got short, and you had some downside follow through back below the 821 and the 50. So to me, you know, it's not, first of all, it's not as oversold. This was 3 harsh down days, so it was worth trying a bounce. Okay, now boom, boom. Question is, I don't know, does it surprise people, and does Icon come out with this note tomorrow about how it's $200 maybe, and that would, you know, squeeze some shorts? Who knows even if it holds or not. But technically, if this was not Apple, I would say you better be careful. Okay, different, right? This was, which I am being careful, not in Apple. So here's, you know, one corrective phase, gapped up after earnings, continued. Another corrective phase in Apple, gapped up, didn't fill it after earnings, continued. And now you had a breakout failure. You're back into the base. Does this area hold? It could, or maybe even test a little bit below it. You know, and then, so that's Apple. So a lower high in Apple is probably not great for the NASDAQ or the market. We'll see what it, you know, materializes to. Then you have social media that's having a hard time bouncing. Facebook was your first shot across the bow right here. You know, I know everyone's like, right, Joe, but you said it can go to $90 this year. I'm like, yes, so did every major analyst in the world, because it did look like right here it can go to $90. And then what happened? The market didn't confirm it. On earnings day, a huge outside day, pushed above, failed, engulfed this whole spot. That was your exit if you're an active trader. That said, okay, I am done for now. And then you had downside follow through. So, you know, on this chart, you know, for some reason, I guess this is different, you know, it's not at that 200 day, but so it's kind of right here. You know, is it oversold enough for a blind bounce as an active trader? A little bit, but has it given you a true signal that it's ready to bounce? No. And then if you look where it came from, you know, it's really, in the scheme of things, it's just pulled back, you know, just to the base where it was. And then if you draw your trend line here, let's see, it's hard to draw the trend line. It's sort of, remember we talked about 80? It broke this trend line. So, you know, it could see lower prices. So if you're, you know, if you're active, just be careful. If you're in it from here or you're in it from here, we've seen it before, or you're in it from here, you know, maybe you hedged it or you don't care. But if you're trading it actively and you start buying it here and it goes to here, you know, as a trader, that could hurt and that could, you know, put you in harm's way. You know, Twitter also, you know, not much of a bounce, failed on earnings. It's still down here. So, you know, if you're an active trader, it's not really giving you, unless there's some kind of catalyst that you're not anticipating, but as a trade, it's not showing you it's ready to bounce yet. It's actually giving you a pretty big, you know, bear flag signal where it could see, you know, this lower end of support. It's not going down, you know, so clean, but I'm just saying, very wishy-washy. You know, thank goodness, you know, you had your first move to start the year where you could have taken some profits. And then here, if you made a lot of money on that move into options, then you had the same amount of options or less, because I talked about having less here than here. You know, then you gave some back, but you didn't blow up. You got to follow the rules. You cannot be in stocks on earnings if you're an active trader. That could happen, and that could crush you. So now here, still hasn't given you a sign yet that it's ready to bounce. Would I be short here overnight after a move like that? Probably not. But I also don't think it's giving you a signal to be long. If you're in a little bit, be in a little bit, just in case you're trying to, you know, be active in there and find out the composure or whatever. As far as the cyber software stocks, QLYS gave it a shot across the bow, and this still has to report earnings, so people are a little scared. This was your quarter, then it, you know, broke out and went. Now, sort of a double top. We'll see what happens. It has to report still. FEYE, which already reported, which you'd have think could have acted better because it already had a good report. They still sold it. Still couldn't do this. We talked about support 1 as a stop, and then support 2 closing a dead low. So, you know, it could be out of play for a little bit, just like most momentum names. BIDU broken. Okay, broken on earnings, bounced back, fell to the 200-day lower. It's been broken for a while in this downtrend. It actually looks horrendous, but anyway. Some guys made some money short BABA today when it broke below 80. Came back a little bit at the end of the day, but you know, if you were if you shorted it quickly below 80, you made some money, and now, you know, earnings are on Wednesday, so you'll see. What else? What else is doing? Google, I had it overnight, and you know what? Just to show you how you could salvage trades, I did have Google overnight. It was the first time it looked like it would made a move above a prior high after a big earnings move from failing at 580. I'm like, let me give it to 547, and I lost in it, but it could have been a lot more. Okay, this was, you know, where it held. So I was thinking maybe, hold on, maybe move this over. All right, anyway, let's get, what are you doing here? You know, that maybe, you know, if the market was going to break out, which it looked like we could have as of yesterday, that perhaps, you know, this was your pullback after failing on 580. So I had some, I said it's got to hold at least, you know, let me give it to the prior low, which is, you know, 547, and boom, so I'm out of it. And now it's still below the moving average, it's still broken, crappy bounce, and I probably won't play this stock in a while. And I tried it. Happens. What I should have done is I should have been long, you know, Netflix, which was acting better, or even Amazon, I wouldn't have hurt as much. And then Tesla. Tesla was upgraded this morning. I said, I'm like, buying in now after a move when it went above 207 or above 214 into 240 prior to earnings. Probably not smart. Tweeted that, and some people actually sold into the free breakfast, I called it, versus adding. Thank goodness. See, we don't just chase scenarios. I'm not saying Tesla is done. It still has to report earnings, but why not, you know, trim into a big move? And here was your breaking of the descending channel. Here's when it went sideways. Here's when we listed and it broke above the 200-day. And then here it, you know, failed at 240 because people are concerned. What if the numbers aren't great or whatever? Same way you have to be a little concerned being short because people are talking down the numbers so much. So anyway, it was a decent sell today. We'll see, and we'll revisit that tomorrow. Oil had a strong move. You know, here when it actually had that major engulfing outside days when I said I think there's a 65% chance the low is in, and I got attacked by analysts everywhere. How'd you figure that out? What do you think the inventories are? Don't you see the ships out on the sea and blah, 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 blah. I'm like, I don't care what's going on out here. After a move that we've seen, a false breakdown could lead to higher prices, and it did. Okay, and me and Brittany had a lot of fun with this because I think, you know, when we made the higher low here, she's like, oh, you know, Scott, do you go from 65% to 70? I'm like, maybe 71. And then we broke out here. I'm like, maybe we're at 75. And then you had another breakout above this, and now you had a small topping tail, which seems like it can come in. But overall, a really nice move from the crowded, engulfing false breakdown here was your time to switch gears. Then if you go to the TLTs, maybe you got a bottom tail. Maybe, they just used the 200-day to stop some people out. But ultimately, it doesn't matter to you if, if you were using your technicals and you saw this mid-range right here and you were trying to continue a trade from the island bottom, your stop was right there. And if that wasn't it, it was the retest there. And now, boom, below the 200-day. So we'll see what kind of bounce it gets to see if it reclaims it. You have the jobs number on Friday. At this point, it's below the 200-day. If it stays below for 3 or 4 sessions, chances are there's real macro selling there. I'm not sure, but all I know is you had a few different signals technically what to do here. You had it when it broke here, or you had it when it broke this accelerated trend. Look, when it broke the 8-day, you could have gotten out of the way. And then if you played a bounce, when it held the gap here with this island bottom, you could have trailed it all the way to this day. So there are lots of ways to make money technically versus having a full-fledged thesis that you're married to and you can get hurt with if it goes against you. So with all that said, here we are again, same critical point, different station maybe, but same volume. I am net short overnight, which I don't like being. I was net short on Thursday into Friday and it hurt. Covered it, salvaged it, but still got me, a little off guard or, had me a little flustered. So finally yesterday I was like, what, let me figure out how I could be in some longs, and then today got stopped out, and now here we are again, with the spiders where I should be in stock short. Instead, I did choose the spiders, which is, probably not the smartest thing, but we'll see what happens. We'll see what happens. There's one down day. It's not like we're so oversold. We were 2% off highs, and you see the Russell down here. You see the mid caps down there. You see the bios kind of broken. You see high beta in the doghouse. So this is at a spot where at least hopefully you have risk down. Doesn't mean you need to be net short, and we'll see if they've scared the bejesus out of enough people where they don't want to be short, and this is the time it happens. I don't know. I'm just going to go with it, and we'll see what happens and take it day by day. But for as of now, the market's definitely been choppy. It hasn't been easy. There's been lots of bent sectors that are almost broken with high beta and with the S&P 2% off highs only, and Europe under a little pressure, and Asia having its first potent down 4% move. You would think the market can follow through, and if it doesn't, then it's same bat channel, same bat story. But at this point, at least, hopefully you reduce some risk, because if the market doesn't show commitment and you're an active trader, you don't have to be committed to it, because just in case risk happens fast, it could hurt. See you tomorrow morning. Have a good night.